So when it comes to tax treatment for crypto, it's the same as every other asset class. It's 15% is the tax rate if you've held it for less than 12 months. Key takeaways is no outright restrictions on which cryptocurrencies an SMSF can hold. You can't actually borrow to purchase crypto. When you're borrowing through an SMSF, you use what's called a limited recourse borrowing arrangement. Trading tokens or trading coins could essentially be deemed as... Welcome to SMSF Insider, where we help busy professionals to gain financial independence using an SMSF. Hi, I'm Troy, founder of Blue Chip SMSF Services. And over the last 20 years, I've helped thousands of Aussies manage the complexities of self-managed super funds. And in this podcast, I'll answer your questions, break down the myths, so you can take charge of your financial freedom. Let's get into it. Hi guys, and welcome to this edition of SMSF Insider, where we'll be talking about, can I purchase crypto using my SMSF? The answer is, of course, yes, you can purchase crypto using your SMSF. It must pass the sole purpose test, which is part of the SIS Act or Superannuation Act. And that is just making sure that the SMSF is providing, the sole purpose is to provide retirement benefits to its members. So there's a few things you need to obviously be aware of with when purchasing crypto using your SMSF. You need to separate the assets, so separate them from your personal assets. So when you're establishing an account with your crypto exchange, you have to set that account up in the name of your SMSF and making sure that it's not in your personal name. So that's a big one. You may need to, your SMSF exchange, your crypto exchange, might want to see copies of your trust documents. So we can send you copies of those, or your SMSF provider should be able to send you a copy of your SMSF trust documents, and they can be provided to the exchange in setting up the account. So make sure when you are setting up your account with your crypto exchange, just make sure it is in the name of your SMSF and not in your own personal name. At the end of the financial year, when you have your audit and your tax returns done, the auditor is going to want to see the name of the crypto exchange and going to want to see who actually physically owns those assets. And if it's not owned by the SMSF, then technically the fund doesn't own them, which the fund could be deemed non-compliant. So that's the main reason, is because it is checked at the end of the financial year that the auditor will want to see the owner of those assets. So just making sure that is the case. Same with the crypto wallets. So when you are with your wallet, making sure that the owner of those coins are in the name of the SMSF and not in your personal name. When you are investing in crypto, just making sure that your SMSF deed allows for that, and also it's covered off in your investment strategy. So you want to make sure that your investment strategy does have crypto assets documented there, and also making some minutes or some notes around the fact that you are purchasing cryptocurrency is also best practice. So always a good idea to make some documentation around that. And also, when it comes to investing in digital assets, making sure that not only is it documented, but it also aligns with your other assets. So having some diversification in there, and typically speaking, your crypto exposure might form a smaller part of your overall investment strategy, not just a one silver bullet approach. So yeah, when you are investing in crypto, potentially you may want some additional diversification in your portfolio, not just having all your eggs in one basket and investing all in Bitcoin, for example. Valuation. So make sure at the end of the financial year you want to have a valuation on June 30. You want to know what that asset was worth. So some exchanges will provide this information to you, but you want to keep an eye on what that value is at midnight or 11:59 on the 30th of June each year. Typically, as I said, your exchange should be able to provide that information to you, but the auditor will need to know that information just to see what the value was at the beginning of the financial year, and then or when you first purchased the asset, as well as what it's worth at the end of the financial year. Pretty important when you're doing tax returns, and then simply providing that info to your SMSF administrator will help them when they're lodging your return at the end of the financial year. So every SMSF needs to have an independent audit. So your SMSF provider or administrator will have an independent audit that they work with, and that auditor will just be sort of going through each transaction and making sure that it's all accounted for and that the assets were purchased in the name of the SMSF. So when it comes to tax treatment for crypto, it's the same as every other asset class. It's 15% is the tax rate if you've held it for less than 12 months. If you've held it for more than 12 months, you'll receive a 1/3 CGT or capital gains discount, which will bring that tax obligation down to 10% from 15%. So if you held the asset for less than 12 months, 15, more than 12 months, it's 10%. And then if you hold it all the way into pension phase, same as every other asset, the tax will be zero. So it's a pretty big one. If you're holding assets for a long period of time, all the way through to pension phase, there's no capital gains tax, which is a huge tax benefit or huge benefit in general when you're investing through your SMSF. You can't actually borrow to purchase crypto. So when you're borrowing through an SMSF, you use what's called a limited recourse borrowing arrangement, which is or LRBA is the acronym. And when you're doing that, you need to be acquiring a single acquirable asset is what you need to purchase. And crypto, unfortunately, doesn't fall into that category of a single acquirable asset, because you can purchase half a Bitcoin or half an Ethereum or half of any sort of coin. So it's not a single acquirable asset. So for that reason, you can't borrow using an LRBA, or you can't borrow to purchase crypto through your SMSF. No loans, no personal use. So your SMSF can't lend crypto to members or related parties. So in summary, essentially, you make sure your SMSF trust deed and your investment strategy allows for purchasing crypto assets. It must pass the sole purpose test, meaning providing retirement benefits to members. Keep the fund assets separated from your personal assets. Maintain audit-ready records. Value the assets at the end of the financial year. Avoid borrowing or personal use for your crypto assets. And of course, what are the tax implications? So making sure that you're applying the right tax implications to the asset, and that'll all come down to how long you've held them, whether it be less than 12 months or more than 12 months, or you've held them all the way through to pension phase. So in summary, that's pretty much it. You can essentially purchase crypto assets using your SMSF. You can't borrow to purchase these assets, but if you are purchasing crypto assets, make sure that it's also established, or the account is established with the exchange in the name of the SMSF. Make sure the deed allows for it, make sure the investment strategy allows for it, and make sure you're keeping audit-ready records. So in a nutshell, yes, you most certainly can purchase crypto assets using your SMSF. So even though there's no official list of coins that you can and can't invest in, the most suitable cryptos, or the ones that we see most, I should say, that clients are investing in, are your traditional and your larger cap sort of coins like Bitcoin and Ethereum, are sort of the most ones that we're seeing clients invest in. You've also got the ability to not only invest directly off the exchange, but you can also use ETFs. There's now ETFs out, or exchange traded funds that are listed on the ASX or overseas exchanges that you can get crypto exposure to without actually having to or setting up an exchange or in the name of the SMSF. So there is a couple of different ways of getting exposure or crypto exposure into your portfolio, and certainly ETF is another one as well. The smaller currencies could be a little bit more riskier in terms of liquidity and getting and selling down some of these coins. If you are investing in the smaller cap space in the crypto world, you might just have some liquidity issues. So that's, I think, why we see a little bit more of clients investing in the bigger coins. So trading tokens or trading coins could essentially be deemed as carrying on a business, which may be in breach of the SMSF legislation. So just be mindful of that as well when you are buying and selling coins, that if you're doing sort of high volume and you are trading, it could be deemed business. So just be mindful of that. Speak to your advisor or your SMSF professional just to make sure you're not stepping outside of those boundaries, and that your buying and selling is deemed investment purposes and not carrying on a business. So just be mindful of that one, and get in touch with your SMSF provider or your advisor. Just quickly, guys, if you're a busy professional, fed up with traditional super funds and overwhelmed by the setup of your SMSF, we can help. Book in a call with my team using the link in the show notes, and let's build your future on your terms. Now, back to the episode. Key takeaways is no outright restrictions on which cryptocurrencies an SMSF can hold, but certainly the bigger cap coins or cryptocurrencies like Bitcoin, Ethereum and XRP and the bigger ones might be a little bit easier for you to get in and out of, as opposed to the smaller ones. So not providing financial advice here, but certainly just something to be mindful of if you are purchasing crypto assets. Certainly the bigger coins will be easier to get in and out of from a liquidity perspective, and the smaller ones probably a little bit more risky. But as I said, not providing financial advice around crypto here. I'm just obviously just providing some guidance around liquidity and risk. Also, just making sure the deed obviously covers off that you can actually invest in crypto, and obviously your investment strategy covers off on crypto assets as well. So being mindful of those few things. When it comes to storage, storing your cryptocurrencies, there's a couple of different options or hardware wallets you can use. There's Ledger, there's Trezor, there's Bitbox. Not providing financial advice here, but certainly best practice is to purchase the device in the name of the SMSF, and also have that invoice addressed to the fund as well. That will certainly help from an auditing and point of view at the end of the financial year. The private keys must be controlled by the trustees on behalf of the fund, not individuals for personal use. Store recovery phrases or seed phrases in a secure, fireproof safe, ideally with multi-signature arrangements or trustee agreement on access. Multi-signature wallets, so requires trustees to authorise transactions, helps reduce the risk of one person misappropriation of fund assets. Can be set up via certain hardware wallets or services like Casa, Unchained, or institutional custody providers. Custodial solutions or professional custodians. Some SMSFs use specialist crypto custodians that provide insured storage, compliance reporting, and secure institutional grade cold storage. The pros is audit-friendly, clear ownership, often insured. The cons, higher ongoing fees, reliance on third-party, and security best practices, no personal wallet use. Don't use your own MetaMask or personal exchange account. It must be the fund specific. Seed phrase management, keep multiple copies stored securely, fireproof safe, bank safety deposit box, and record the custody process in SMSF minutes. Multi-factor authentication on any exchanges used for trading, document control, minute trustee meetings that approve crypto purchases, storage methods and signatories. Audit and reporting. Provide auditors with public wallet addresses, transaction logs and exchange reports. Evidence the wallet belongs to the SMSF as well is a big one. Some trustees use crypto accounting software like Coinly, BGL, Class to streamline their reporting. I know we use Class, which is certainly helps with the streamlining of from a reporting point of view. Best practice recommendation for SMSFs, use hardware wallet, as in cold storage, in the fund's name with multi-signature security, seed phrases stored securely under trustee control, and full documentation for compliance. For larger balances, consider a professional custodian for insurance and audit readiness. What steps need to be followed to ensure compliance when investing in crypto with an SMSF? So the pros of crypto in an SMSF, there's some tax benefits, obviously 15% if you hold them for less than 12 months and 10% if you hold them for longer than 12 months. In pension phase, income and gains may be tax-free. Diversification, exposed to a new asset class outside of traditional shares, property and cash. Potential hedge against fiat currency inflation. High growth potential, crypto can deliver outsized returns compared to traditional assets, though obviously with that comes higher risk. Control, so trustees choose which cryptos to buy, when to trade and where to store them. Ability to structure storage securely, so like hardware wallet and custodians. Estate planning and succession, assets held in an SMSF remain within the super environment, allowing for structured transfer to beneficiaries in a tax-effective way. The cons, however, of crypto in an SMSF is there is obviously regulatory compliance. You must strictly separate the SMSF assets from personal holdings. It requires accurate record keeping, wallet identification and compliance documentation for audits. ATO scrutiny is increasing in this area. Also, the volatility and the risk. So crypto prices fluctuate dramatically, which is sort of unsuitable for sort of conservative investment strategies. Risk of total loss in the project collapse or if it gets hacked. So there is that risk as well. Security responsibility. So trustees are personally responsible for the safekeeping of private keys. Loss of seed phrase equals loss of SMSF assets. So, and potential compliance issues. Liquidity issues. Some cryptos and exchanges can have low liquidity or withdrawal delays. It can be hard to quickly convert to cash for pension payments or other fund obligations. Audit and administration burden. Auditors need clear evidence of SMSF ownership of wallets. Complex reconciliation of trades across multiple exchange wallets. It may require specialist crypto accounting software. Borrowing is not allowed, so SMSFs can't use an LRBA or limited recourse borrowing arrangement to leverage into crypto. It must be purchased outright using the fund capital. Regulatory risks, so there is a risk, obviously future governments or ATO changes could restrict crypto in SMSFs. Global regulatory shifts may also impact liquidity and valuations. As a balanced view, so best for trustees with a strong understanding of crypto, appetite for risk and robust record-keeping systems. Risky for conservative trustees or funds with members approaching retirement who need stability or stable income generating assets. How do crypto assets in an SMSF affect retirement planning and long-term wealth growth? The impact on retirement planning, risk profile and suitability. Crypto is a high risk, high reward asset class. So might be okay for younger SMSF members. Exposure to crypto can be obviously growth potential over decades can be huge. But for older members nearing retirement, volatility could threaten the capital preservation and the ability to make reliable pension payments. Portfolio balance. So crypto should generally speaking, and this is not advice, of course, be a small allocation of sort of 1 to 10% perhaps of depending on the risk appetite of the trustees, but it needs to complement, not replace your core holdings like property, Australian shares, international shares, equity, and fixed income. Liquidity requirements. So retirement means paying a minimum pension payment. So when you are in pension phase, you do need to have a minimum pension amount that the fund needs to pay, which is 4% plus annually, depending on your age. Crypto is volatile and sometimes illiquid, so relying on it to fund pension payments can be risky if values drop sharply and withdrawal times can drag out. So long-term wealth growth, potential upside. So if adoption growths, crypto can provide outsized long-term returns, boosting overall SMSF wealth. A small early allocation could meaningfully increase total retirement savings if your crypto appreciates strongly. Compounding effect, obviously, over the longer term, holding crypto within the SMSF allows tax-efficient compounding, so 15% obviously is the maximum tax rate, and 0 on the other end of the spectrum when you're in pension phase. A diversification benefit, so crypto's returns are not perfectly correlated with shares or property, though correlation has risen in recent years. It can act as a good way to diversify in growth-oriented portfolio. Downside risk, though, however, there is obviously high volatility that the values could crash 50% or more in short time frames, potentially undermining the retirement goals. Technology regulation risk. So if crypto adoption slows or governments restrict use, long-term growth could be limited. Security risk. So if trustees mismanage private keys, or losses can be permanent. So in addition to that, strategic considerations for SMSFs, age and time horizon. Younger members can afford higher exposure for growth, but older members usually need more stability. Diversification, so crypto should be one of perhaps several growth assets in your portfolio, not only one. Retirement phase planning, so crypto is best treated as a growth booster in accumulation phase, probably not so much as a primary source of pension income. Exit strategy, so trustees should document when and how crypto holdings may be sold to fund pension or reallocation to safer assets. In summary, crypto in SMSF can boost long-term wealth growth if managed carefully, thanks to concessional tax treatment and growth potential, but it can also jeopardise retirement security if exposure is too high, especially close to pension phase due to volatility and liquidity risks. What is the process for liquidating crypto assets within an SMSF? Trustee decision and documentation. So the trustees make the decision or resolution, make some meeting minutes and record them, the decision to sell those assets. The reason should be tied to the SMSF's investment strategy, example, rebalancing, risk reduction, or funding pension obligations. This keeps you audit-proof and compliant. Identify which wallet exchange holds the assets, confirm which SMSF owned the wallets or exchange account hold the crypto, ensure the wallet exchange is clearly documented and as belonging to the SMSF, not to trustees personally. Execute the sale through the exchange, log into the SMSF account on the registered exchange, and sell down those assets and sell the chosen crypto to Australian dollars. And then from there, from the cold wallet or the exchange, execute the trade and sell them into your SMSF bank account. It's important to always record the transaction and the timestamps and exchange confirmations, just for audit keeping purposes. And this will just obviously make things easier when at the end of the financial year when the audit is conducted. Once the funds are deposited into the SMSF bank account, the sale proceeds must flow into the SMSF designated bank account, not any personal account. This ensures clear separation of SMSF versus personal assets. For record keeping and audit trail keeping, exchange transaction reports, wallet transfer logs, public addresses, transaction IDs, bank account records. Many trustees use crypto tax software, as I mentioned earlier, like Coinly, BGL, or Class Super to generate compliant reports. The tax treatment, so crypto sales are treated as a disposal. So if it's sold within a 12-month period, then it'll be taxed at 15%. If it's sold after 12 months, it's 10%, and if it's sold in pension phase, then it's zero tax treatment there. Thanks for tuning in to this episode of SMSF Insider. If you got value from this, make sure you subscribe so you never miss the strategies we share to help you take control of your financial future. Find us on socials at BlueChip SMSF or book a call with our team to see if we can help you.